Welcome to the May 7th, 2018 Advance Report from McGowanGroup Asset Management clients and NetWorthRadio.com listeners. I'm Spencer McGowan, your financial weatherman. We are going to take you through a fast-paced tour of exactly what's going on in the global financial markets. A graphic educational series here on YouTube. Be sure to subscribe. Every time we post, about once a week, you'll get a notification. Today, we're going to go back to the foundation. We want to be good at 3 asset categories: safety and income, high cash flow, think global lending, be the bank, and growth with income, dividend companies. Now, let's cover how not to do investor relations. This is the bonehead report for this week. What we have here, Tesla. This very bad, horrible day right here. What you see is Elon Musk holding a conference call with analysts. Now, his stock, by any measure, overpriced because he burns about $1 billion a quarter, managed to lose net income twice as much money as last year, a little over that. And when the analyst said, "Hey Elon, when are you going to make money essentially, and how much cash do you have left?" Well, he first said that was a boring question. Next question, he said it was a bonehead question. Insulting analysts started with Elon Musk over a year ago, and we're going to cover the salacious details. But you could see during the analyst call, they just started pounding Tesla stock. It's been as high as $390, and it dropped all the way to $250 just recently. Well, this would-be rally gone now because of Elon Musk's bad behavior. We'll see if investors want to pony up in the face of insults. Here we go. Dow Jones Industrial Average. You can see the 26,500 high, a low near 23,000, and overnight trading back there in the rebalancing correction. That sets a range-bound status. But notice we're asymptotically bouncing along that bottom. Today, about 24,000 was the sine wave this week for the Dow. And what's intriguing, we could test that 23,000. If we go below it, well, the technicians will result in quite a bit of selling. But in the meantime, range-bound market earnings growth is absolutely off the charts, which means that the valuation level is actually more favorable for long-term stability after this setback in the Dow. Interest rates. Notice something. The blue is the 10-year interest rate. This week spiked a little bit above 3, and the 30-year, well, 3.12. Notice that both of these, and this is a 2013, so it's a 5-year chart, you can see the post-election high of 3.2% on the 30-year and now about 3.1. Why has the long rate not increased with short rates going from near zero to on a 10-year treasury now to 2.9%? The T-bill's gone closer to 2%. The interest rate environment has a puzzling question, which we'll dive into in this week's long play program at NetWorthRadio.com. Fixed income strategy, we're going to cover how to address the fact that the duration risk of the 30-year Treasury certainly unacceptable for the extra 20 years above the 10-year Treasury because the yields are essentially equal. Who's buying those 30-year treasuries? Well, it guides you to another part of the fixed income market. The ultra short, whether it's like the Vanguard money market near 2% or the floating rate loan funds near 4% for the safety and income portion of the portfolio. All right, 20 years of misery here. Blue chips or cow chips is this segment. And this looks more like cow chips. This is back 20 years ago, 1998. You can see AT&T and GE, they were favored rallies. But look at this. Here we are 20 years later, and you got a dividend from AT&T and GE, essentially 3% or 4%, AT&T as much as 5%. Now, we're looking at $32. Well, that price goes all the way back to 2002. What gives with AT&T? They can't protect us against spoofing. They just let whoever wants to market to us call us and try to sell us things. Well, maybe they ought to get it together before they try to buy Time Warner. GE, this is just a house of pain, $14, and you can see compared to 20 years ago, this has been not blue chips, but cow chips. The way you protect against this is the McGowan Group Performance by Security Report. If something in the portfolio is doing damage, well, it's going to identify that. For example, Walmart had an extended period where it went from 70 to 40 and languished. What happens in a portfolio, if something's pulling you back, it needs to be addressed. Now, we've covered this before. Could be the most attractive high cash flow dividend category in the investing universe, in my opinion. Here's oil prices, the burnt orange graph, and here's the pipelines. Notice they caught up in percentage terms. Stephen Norris, Super Chuck Norris here, came up with this chart based on percentages. West Texas Intermediate crude fell 76% in the 2014-2015 correction, and the pipeline index down about 63%, moving nearly lockstep, although there's a lag. How could that lag benefit us? Pipelines are paying about 10%. Kinder Morgan just raised their dividend by 60%. Wow. If pipelines were to catch up with oil in percentage terms, there's 130% potential appreciation over a 5 to 10 year period. Noting that there is price risk, but high cash flow, if you get paid near 10% for 10 years and the dividends continue, well, 100% plus the reinvestment ability, this could be one of the favored categories for up to a third in growth with income. I'm Spencer McGowan. Join us at NetWorthRadio.com for more and some special financial lessons built into this week's program. Join us again next week. YouTube, McGowan Group. My firm, McGowanGroup Asset Management, sponsors NetWorthRadio.com and, of course, our YouTube channel under McGowan Group. Some educational disclosures and discussions that I wanted to add to the broadcast. The first is, I'm very proud of our team, including Stephen Norris, who will be added as soon as we redo the picture. He's our newest team member. Come down, meet the team that cares, get a written plan, because the securities we discuss, the financial news we discuss, that's not a recommendation until you actually come down and get a customized plan at the Crescent. You'll get a tour, and we look forward to seeing you. We're going to cover value at risk of loss in portfolios, and you can see it right here. Learn about our performance, what happened in 2008, how long did it take to recover. All of those items are posted right here at NetWorthRadio.com or the McGowanGroup.com. The other part of the program, when we look at price fluctuations in bear markets and risk control, that's a huge part of NetWorthRadio.com. We look forward to helping you advance your plan and your cash flow. Come down and meet the team that cares.